A few months ago, you might have seen Tiffany Chance on your feed, not selling her products, but standing outside the Capitol in D.C. protesting. She's one of the 7 million small business owners who built a life on TikTok, and for over a year, she's been living under a guillotine, waiting for the January deadline that would effectively delete her business overnight. This week, she finally got the memo she was praying for. The deal is signed, the ban is over, TikTok is saved. But as the details of the agreement signed by ByteDance CEO Shouzi Chu began to leak out, the victory started to feel a bit complicated. For years, the narrative from Washington was centered on a singular, urgent mission: national security. We were told this was a desperate battle to keep American data away from foreign influence, yet the resolution doesn't look like a standard corporate spinoff. Instead, it's a specific consortium of power: a tech billionaire who is a vocal political ally of the administration, a massive private equity firm, and a sovereign wealth fund from the United Arab Emirates. The reversal was almost instantaneous. One moment, the platform was a threat to democracy that had to be dismantled. The next, it's a vital global community with its recommendation algorithm, the very thing at the heart of the controversy, now being licensed to these new owners to be retrained. It's left people like Tiffany, and even some in Congress, feeling a strange sense of whiplash. While the White House remains quiet, critics are calling it a dictator's playbook, suggesting the platform hasn't been secured so much as it's been captured. It forces us to look past the relief of the 170 million users who get to keep their accounts and ask a much more uncomfortable question. In the fight to save TikTok from one set of masters, did we just witness it being handed over to another? Okay, so let's unpack this. This deep dive is really about this incredibly complex joint venture that finally resolves years of regulatory and geopolitical wrangling. And it's all driven by that one law, right?
That's right. The Protecting Americans from Foreign Adversary Controlled Applications Act, or PFACA.
PFACA, that's the one.
Yeah, that act was the legal hammer, really. It essentially gave ByteDance a choice, and it wasn't much of one: divest control or face a total ban in the U.S.
And the stated mission was always about national security, wasn't it? Always.
The core goal, at least as Washington put it, was eliminating what they called foreign adversary control over a platform that had, become this massive channel for news, for commerce, for culture itself.
So this joint venture, the TikTok USDS Joint Venture LLC, that's the corporate structure they came up with to make the government happy.
Exactly. It's the mechanism they chose to satisfy that mandate, and specifically to prevent that ban that was looming on January 23, 2026.
So let's talk about who's in control now. The composition of this new ownership structure is, well, it's everything. It's not a simple sale, is it?
Not at all. It's not a single buyer. It's a consortium. And you can tell it was designed specifically for legal compliance. You've got 3 main managing investors who hold the real power.
And those are?
You've got Oracle, the massive private equity firm Silver Lake, and then Abu Dhabi-based MGX. Together, those 3 hold somewhere between 45 and 50% of the new joint venture.
Okay, between 45 and 50%. What about ByteDance, the original owner? How much skin do they have left in the game?
They do have some, but it's very carefully minimized for regulatory reasons. ByteDance itself keeps a minority stake of just under 20%.
Specifically 19.9%, I read.
That's right, 19.9%.
Yeah.
And the rest is held by existing investor affiliates of ByteDance. But that number, that 19.9%, that's the key. Keeping ByteDance just under that 20% threshold is the legal trick that ensures the whole thing is majority owned and controlled by, non-adversary parties. It's how they satisfy PFACA.
Let's trace the path that led us here, because this whole divestiture thing, it wasn't the first plan, was it? It was actually the last resort after another really high-profile idea failed.
That's a great point. The whole saga really started when the U.S. government realized TikTok wasn't just another social media app. It was a potential vector for data and for influence.
And that's when they came up with Project Texas.
Exactly, Project Texas. TikTok poured a ton of money into it starting in 2022. The idea was actually pretty revolutionary at the time. They wanted to hold off a forced sale by routing all U.S. user data to Oracle-hosted servers right here in the U.S.
It involved third-party audits, code reviews, the whole 9 yards. It sounded like they were building a digital fortress. So from a data security perspective, why wasn't that enough for Washington?
Because security isn't just about where the data physically sits. It's about who has the ultimate control. The U.S. government has this really powerful body called CFIUS.
The Committee on Foreign Investment in the United States.
That's it. It's a serious interagency group. You're talking the heads of Treasury, Defense, State, Homeland Security, the Attorney General. And CFI US decided that as long as ByteDance still owned the company and controlled the algorithm source code, there were still major vulnerabilities.
So what were those specific vulnerabilities they were worried about, beyond just, a rogue employee in China logging in?
The core issue was the risk of coercion. China has these national security laws that can compel Chinese companies to cooperate with intelligence gathering. So even if ByteDance promised up and down that its employees wouldn't access the data, the fear was that Beijing could just mandate a change in the algorithm.
Covertly,
forcing them to manipulate content or hand over data, completely bypassing any of the U.S. oversight. And then a federal appeals court ruling in 2024 really cemented that view. The court explicitly said, and I'm paraphrasing, that mitigation efforts short of divestiture were insufficient.
And that was it. That was the moment the writing was on the wall.
That was the moment this whole joint venture became inevitable.
So once divestiture was the only path forward, it still wasn't simple. We saw months and months of back and forth, just extending the uncertainty for everyone.
Right, because the regulatory gun was cocked, but the bullet still had to travel through Beijing. The Trump administration had actually given a tentative okay to this kind of ownership structure way back in September.
So they'd basically signed off on the buyers.
They had, but the deal just stalled for weeks. And the reporting suggests it was because Chinese officials wanted some kind of trade or diplomatic concessions before they would authorize ByteDance to sell off a majority stake in what is, their crown jewel technology.
Which just underscores how much of a geopolitical bargaining chip TikTok had become. It wasn't just a corporate asset anymore.
Absolutely. It was a piece on the chessboard between two superpowers. And that wrangling just dragged on and on until the final agreements were signed. The timing is also really important here. The deal is set to officially close on January 22nd, 2026.
Literally one day before the PFACA ban deadline.
Exactly. That tells you just how much pressure they were under, right up until the very last minute.
Okay, so let's dig into the structure of the new control. If ByteDance has 19.9% and their affiliates have another 30.1%, that's 50% combined. The new U.S. consortium has, 45 to 50%? How is U.S. control actually guaranteed if the numbers are that close?
It's a great question. The guarantee really lies in two key areas. The capital, yes, but more importantly, the governance. While the equity split looks like it's hovering around 50-50, the new operating entity is designed with a very specific governance structure that's meant to ensure U.S. control over day-to-day operations and policy.
And that all comes down to the board of directors.
That's right. Their restructured TikTok will operate under a 7-member board. And the crucial part is this will be a majority American board. This board will have final authority over two absolutely vital functions within the U.S. market: content moderation and all policy decisions.
So that structure is the check. The belief is that American decision makers, appointed by an unstricken majority board, will set the rules for the American platform, and that will insulate it from any foreign government interference.
That's the theory, yes.
Okay, this all sounds like a very careful, very Americanized structure. But we have to talk about the elephant in the room that seems to complicate the whole national security story, and that's the inclusion of Abu Dhabi-based MGX.
And this is where the story pivots, and it gets really, really interesting. The inclusion of MGX turns this from a simple corporate divorce into this complex, high-stakes geopolitical transaction.
I mean, if the whole point was to eliminate foreign control, why are you replacing it in part with a state-owned foreign entity? It just seems contradictory.
It does on the surface,
right?
But I think it reflects this huge rise of sovereign wealth influence, specifically from the Middle East in Western tech markets.
For our listeners who might not be familiar, can you explain what a sovereign wealth fund like MGX actually is?
Sure. A sovereign wealth fund, or an SWF, is basically a state-owned investment company. It's funded by a nation's surplus money. In Abu Dhabi's case, that's mostly from oil and gas. And these aren't like your typical private equity funds that are looking for a quick profit and then an exit.
They play the long game.
A very long game. They're strategic investors, and their goals often align with a state's broader economic and, frankly, political objectives. They're using this money to diversify their economy away from oil and, in the process, buy significant national influence on the global stage.
And MGX specifically is all in on AI.
100%. MGX Fund Management Limited is an Emirati state-owned firm created specifically for investing in artificial intelligence. It was only founded last year, in 2024, but with this incredibly ambitious goal of managing $100 billion in AI-driven assets.
100 billion.
100 billion.
Yeah.
This is petrodollars being systematically funneled into controlling the future of global tech infrastructure.
That scale. It just doesn't sound like a passive investment. It sounds like they're looking for strategic, maybe even directional control over these technologies.
The leadership really underscores that. The board chair is Sheikh Tamim bin Zayed Al Nahyan. The vice chair is Khaldoon Al Mubarak. These are central figures in the UAE's government and its economic planning. And their investment strategy is holistic. They're buying into the entire AI ecosystem, semiconductors, infrastructure, AI tech companies all over the world. They're basically mapping out and buying into global dependencies.
And their involvement in this TikTok deal isn't a one-off. It's part of a much bigger, coordinated push for influence. What are some of their other partnerships?
The scale is just immense, and it really shows the deep trust or maybe the necessary collaboration that the West now has with Abu Dhabi. For example, in January of 2025, MGX partnered with giants like OpenAI, SoftBank, and even Oracle on that $500 billion Stargate project.
The AI infrastructure build-out.
Exactly. They're also working with BlackRock and Microsoft on something called the Global AI Infrastructure Investment Partnership. So they're aiming to control the physical hardware, the data centers, the power grids that fuels AI across the planet.
And they're not just partnering, they're buying up the physical assets too.
Absolutely. Just a few months ago, in October, MGX was the lead partner in a group that bought aligned data centers for $40 billion. It was reported as the largest data center deal ever. So you have this entity, MGX, that is deeply embedded in the physical and virtual infrastructure of U.S. and global AI, and now it's a key stakeholder in the one social media platform the U.S. government said was too sensitive for any foreign control.
It really forces you to redefine what the U.S. government means by national security, doesn't it? Is it about excluding all foreign influence, or is it just about excluding China? Because bringing in MGX suggests there's a new definition of who's a strategic ally in this tech Cold War.
It implies a much more nuanced geopolitical calculation. The fact that a foreign sovereign wealth fund is part of this deal signals a kind of hierarchy of foreign involvement. The UAE is clearly seen as a vital bridge now, a strategic partner connecting Eastern capital with Western markets and security demands, especially around this idea of AI sovereignty.
So AI sovereignty doesn't mean one nation controlling everything. It means control is held by a consortium of allied powers. And that club now officially includes the UAE.
That's the implication, yes. It suggests the U.S. government views the UAE as a secure channel for capital and influence, which is a sharp contrast to its view of Beijing. This deal signals that national security isn't about all foreign involvement. It's about specific, perceived adversary involvement. And the cost of kicking out the adversary is inviting a powerful new ally to the table.
Okay, let's pivot now to the technical heart of the platform, the algorithm. If the platform is the body, the recommendation engine is the brain. This was the biggest sticking point in the whole negotiation, right?
Oh, absolutely. The For You page algorithm is what made TikTok, well, TikTok. Analysts were very blunt about it. Buying TikTok without the algorithm would be like buying a Ferrari without the engine. It's worthless.
And this is where Oracle comes in, not just as a financial investor, but as the technical custodian, the national security partner.
Their role is immense. It's multi-layered. They are the designated trusted security partner in this whole thing. That means they physically store and manage all U.S. user data on American cloud servers. They audit compliance, and crucially, they oversee the security and the function of the algorithm itself. Think of them as the digital gatekeepers.
So now we get to what's been called the digital exorcism. What does it actually mean to retrain this algorithm?
The term exorcism is actually pretty fitting because it really describes the attempt to cleanse the algorithm of any lingering foreign influence. The new U.S. entity will first license the core algorithm from ByteDance.
They can't buy the source code itself?
No, they're not allowed to. Mostly because Chinese law now classifies advanced algorithms as a controlled technology export. So once they license it, they have to retrain that algorithm using exclusively U.S. user data.
The idea being that the content feed will then be entirely free from outside manipulation, governed only by what Americans are watching.
Correct. But the technical challenge here is just monumental. Imagine trying to perfectly replicate a masterpiece, but you're only allowed to use half the original colors. An algorithm is a dynamic learning system. It got its magic, its viral power, from training on a vast, diverse global data set.
So if you try to decouple it and train it only on a localized American data set, what's the risk?
You risk losing the core functionality, the magic. Engineers have to perform this transplant while the platform is still operating at full speed. If the retraining fails, or if the smaller U.S. data set creates weird, unexpected patterns, The feed could just become sterile, predictable, or just plain broken. It's a massive, risky experiment in creating digital borders. Can they replicate that viral magic when the algorithm is essentially being put in a cage? That is the ultimate technical gamble.
And this technical mandate immediately raises the political question that's fueling this whole capture narrative. If the algorithm is now governed by American interests, who exactly are those interests?
And that's the critical flip side of this whole coin. The initial fear was about covert manipulation by a foreign power. The new fear, which is just as serious, is about overt content shaping by a politically aligned domestic group. Critics are very quick to point out that the key U.S. players here, Oracle, Silver Lake, other investors, they all seem to share a strong public common denominator.
Open support for the current administration.
Open support for the current administration and its political allies, yes.
And Oracle, being the gatekeeper of the technical core, is central to this fear.
Absolutely. Oracle is run by Larry Ellison, a very long-time, very high-profile supporter of the administration. And it is Oracle, specifically, that will oversee the U.S. TikTok algorithm's security and compliance. So when you place a platform that is this vital for national discourse under the technical care of a billionaire who is so politically connected, it's going to raise immediate flags about neutrality.
Critics are essentially arguing that the administration didn't just want the platform secured from China, they wanted it steered by people they trust politically.
That's the argument, yes.
The analogy that keeps coming up is the takeover of X, formerly Twitter. How does that situation illustrate the specific dangers people are worried about with TikTok?
The X analogy is so relevant because it's a recent high-profile example of how a change in platform ownership can directly and very quickly influence algorithmic outcomes and content moderation. After Elon Musk took over, we saw documented shifts. The algorithm on X appeared to systematically boost Republican-leaning accounts and content,
while also loosening the rules on certain kinds of speech.
Right. It simultaneously relaxed constraints on right-leaning conspiracy theories and hate speech, often at the expense of what you'd call mainstream news sources.
So the fear is that the new TikTok management could use similar, more subtle mechanisms to influence what people see.
Exactly. The new governing board, which will be appointed by administration appointees, they can simply adjust the algorithm's dials. They don't need to go in and manually delete videos. They could just change what metrics are prioritized, boosting shares over comments or giving more weight to content from certain demographics or political accounts. These subtle tweaks are more than enough to dramatically alter the political temperature of the entire platform.
And given how important TikTok has become as a news source, the implications for American political discourse are huge, far bigger than they would have been even a couple of years ago.
It's a complete game changer. Data from the Pew Research Center shows that more Americans now get their news from TikTok than they do from X. Especially for younger voters, TikTok is foundational to how they consume political information. So if this new governing board uses its authority to, intentionally or even unintentionally sway the algorithm, it could shift election narratives and public opinion on a massive scale.
We also have to think about content moderation. That's the other lever they have. Historically, conservative political figures have been very vocal about what they see as unfair censorship on major social media platforms.
That's the second and equally powerful lever of control. Right now, TikTok has community guidelines that prohibit things like misinformation. But the new Majority America board has the final say on that policy. They could choose to adjust it significantly. They could allow more tolerance for political content that the current guidelines might flag as misleading, moving the platform much closer to the looser moderation style we now see on X.
And if the new owners decide that political alignment is more important than just maximizing engagement across the board, the whole feel of the app could change. It could lead to a self-selection effect.
That shift would be profound. If the platform starts to feel politically captured, you could see millions of left-leaning or politically moderate users just leave, or at least significantly reduce their time on the app. And then that self-selection feeds back into the retrained algorithm, giving it a narrower, more ideologically skewed data set to learn from. So even without any overt manipulation, the platform's content would inherently skew toward the remaining user base, reinforcing that perception of political alignment.
So the trade-off is pretty stark. In the name of national security, we may have just exchanged the potential for opaque foreign influence for the very real possibility of transparent, politically connected domestic influence over our digital town square.
That is the ultimate tension of this deal. The political risk has shifted from geopolitical to domestic. For you, the user, the platform is saved. But you should probably anticipate a pretty significant transformation in the subtle mechanics that decide what you see every single day.
Let's turn to the economic side of this, because while the politics were intense, the reality is this deal saved a huge part of the U.S. economy that was basically living under an existential threat.
The relief is immediate, and it's measurable. I mean, this deal keeps the platform running for 170 million U.S. users. That means preserving an estimated $40 billion in annual ad revenue that would have vanished. And for the 7 million small businesses, people like Tiffany Chance, it means their primary way of reaching customers is still alive. A total ban would have been catastrophic.
But the financial cost to ByteDance was immense. This wasn't a normal market sale. It was a transaction shaped by regulatory force, and the price tag really shows that.
The valuation drop is just staggering, and it sets a real precedent. Before the ban became a concrete threat, TikTok's U.S. business was estimated to be worth around $50, maybe $60 billion.
And the final price of this deal?
The final price valued the U.S. operations at only $14 billion. That is a loss of over $36 billion in market value, a massive explicit discount that could be attributed directly and solely to geopolitical risk.
So the U.S. essentially used its regulatory power, PFACA, to force a fire sale. They cut the asset's value by nearly 3/4.
It's an incredible demonstration of the strategic power of these national security mandates in the modern tech economy. This deal proves that if you're a multinational company in a sensitive sector, complying with U.S. strategic priorities is non-negotiable. And the cost of that compliance segregating data, retraining algorithms, submitting to U.S. governance is reflected directly in your company's valuation. It's a stark warning.
Let's talk about Oracle, one of the big U.S. winners here. Beyond the obvious political connections, how does this deal really benefit Oracle's core business?
The market reacted instantly. Oracle shares jumped 5%. Investors see this as a huge non-AI catalyst for them. For the past year, Oracle's cloud revenue has been overwhelmingly driven by demand for AI processing. And while that's great, it also creates a lot of volatility and requires massive spending. I think they're planning something like $50 billion in capital spending next year alone.
So TikTok gives them a crucial, stable revenue stream outside of that AI boom and bust cycle.
Precisely. This deal gives Oracle a stable, high-margin revenue stream that's completely decoupled from the AI spending cycle. By locking in TikTok as a long-term, mandatory cloud customer, they're adding predictable, stable workloads to their $4 billion quarterly infrastructure business. They're not just hosting TikTok, they are the required data fortress. It positions Oracle as the key player in secure, compliant data management, which is a huge long-term win for their cloud business.
Okay, turning back to the user level, let's talk about the anxiety that creators and small business owners are feeling. They're relieved the platform survived, of course, but they seem incredibly nervous about the new ownership, especially the involvement of a private equity firm like Silver Lake.
And that anxiety is rooted in a fundamental difference in philosophy between a founder-led, growth-obsessed company like ByteDance was and a profit-driven private equity consortium. Private equity's job, including Silver Lake, is to maximize short-term dividends for their shareholders. And for a platform that became famous for its organic, unpredictable viral growth, that focus on profit often means one thing.
A shift to a pay-to-play model?
A shift to a pay-to-play model, exactly. Less organic discovery for the small creator or the small business, and a lot more pressure to buy ads to reach your audience.
So the fear is that the era where someone like Tiffany Chance could build a business from scratch based entirely on organic reach, that era might be over.
That is the core fear. The creator economy is moving from this period of chaotic growth to one of regulated maturity led by financially disciplined owners. And while that transition guarantees the platform's survival, a lot of creators feel like it's going to be a loss of the platform's soul, sacrificing that unpredictable organic nature for highly profitable, predictable monetization.
It's the price of survival, the corporatization of the platform in exchange for stability, but it really changes the opportunity for the millions of people who built their livelihoods there.
It shifts the entire dynamic from a growth-at-all-cost strategy to a margin maximization strategy. The institutional backing is great, it protects against future bans, but it introduces the risk that the platform will start prioritizing shareholder return over the creative chaos that made it so special in the first place.
And finally, let's just touch on the sheer logistical complexity here. We know ByteDance was preparing a standalone US app before this deal was finalized.
Yeah, that effort was internally codenamed M2. They were getting ready to launch a US exclusive version of the app to replace the original. The final deal keeps the original app running, but the fact that they were even considering a full migration just shows how overwhelming the compliance demands were. A full digital divorce was the only way they could see to guarantee complete separation.
And trying to migrate 170 million users to a new app, even with the same brand? That sounds like one of the most complex software rollouts in history.
It's a logistical nightmare. You have to convince everyone to download a new app, transfer their accounts, followers, data, all while trying to keep the algorithm's integrity. If that transition got botched in any way, if the user experience suffered, you risk fragmenting the entire audience.
And that would hand a massive advantage directly to your rivals.
A massive immediate advantage to YouTube Shorts and Instagram Reels, who are just waiting in the wings to capitalize on any instability.
So we've navigated the complex layers of this agreement, from these geopolitical balancing acts with the UAE's sovereign wealth fund to the highly scrutinized, politically sensitive technical transplant of the algorithm by Oracle. We see the clear, immediate relief for 170 million users and millions of businesses, but we also see this profound consolidation of power in the hands of a politically aligned consortium.
I think this TikTok deal really offers a detailed blueprint for how these cross-border tech disputes are going to be resolved from now on. They're not solved through simple bans or full divorces, but through these incredibly complex hybrid models where national security, economic pragmatism, and domestic political influence are deeply, and I think sometimes uncomfortably, intertwined. It also definitively shows how national security has become a core discount factor in tech valuations, forcing compliance costs that can just drastically shrink a company's market worth.
The central issue that started this entire saga was ensuring American data and discourse remained free from foreign adversary control. By forcing the algorithm to be retrained and governed by a politically connected majority American board, we have replaced the specter of covert content manipulation by a foreign power with the concrete reality of overt content shaping by domestic political and corporate interests.